Okay, dear students, today we are doing more questions from ACCA Study Hub, the new resources for OT cases. So you have on your screen a question. A is in a business as a sole trader on 3rd Feb 2023. 3rd Feb 2023, she purchased a freehold factory. So on this date, she bought the factory. Now, A also owns 2 freehold warehouses and wants to sell one of these in March 23. See, the dates are near. Dates are near. Hope you remember rollover relief. Hope you remember rollover relief. You remember rollover relief when we sell an existing asset and we buy another asset. That means your existing assets proceeds will be transferred, will be reinvested in the new asset. Remember? Okay. So this is the same case. But yes, hope we all remember the case of cash in hand. There may be possibility of cash in hand. The first warehouse was purchased on 20th March 2018 for 184,000 and can be sold for 213,000. This is the proceeds and cost and proceed of first warehouse. And the second warehouse was purchased on 18th July 21 for 113 and can be sold for 180. Okay. So these are the two existing assets. We'll be selling one of them. We'll be selling one of them, and then we'll be buying this asset. See, we'll be buying this asset for 168. This is our new asset. Okay. Now, all of the above building have been or will be used for business purposes. Yes, this is the condition for rollover, that the asset sold and the asset is which we are going to buy. The asset sold and the asset bought both must be used in business, right? She'll make a claim to roll over the gain on whichever warehouse is sold against the cost of factory, Now, on 2nd April 2023, now this is the separate case. Let's first fix this first paragraph. Let's first fix this first paragraph. Okay. So what will be the chargeable gain after rollover relief if AM sells the first warehouse? Now let's start with the first warehouse. If you want to take the picture of this screen, you can, because I'll be moving this screen, right? Okay. So you have the first warehouse cost is 184 and this is the disposal proceed. Okay. 184 and 213. So disposal proceed less cost. This is the gain. Now wait. This is the disposal proceed of old asset, and in return you bought new asset for 168. You sold old asset. Be careful. We have done everything in the class. You sold old asset for 213 and you are buying new asset for 168,000, right? So how much cash in hand? How much cash in hand is left? The cash in hand is 213 minus 168. One three minus 168 is 45. 213 minus 168 is 45,000, right? Okay. So we all know cash in hand cannot be rolled over. Cash in hand, in case of cash in hand, your rollover relief will be restricted. Now, what is that? What is the story? Listen. Here we'll write rollover and we'll write gain immediately chargeable. So now what is the technique? The technique is the immediately, listen to me, the immediately chargeable gain will be lower of these two. Will be lower of these two will be lower. One is 45,000. This 45 means 45,000, right? So 45,000 and 29,000, which amount is lower? Out of 45,000 and 29,000, the lower amount is 29. So your gain immediately chargeable is 29. That's why you can't roll over anything. You can't roll over anything. So this is your final gain. This is your final gain, 29,000. And if you have attended the classes actively, you better know all these things. This is just a revision. So gain immediately chargeable is always lower of two things. The gain plus the cash in hand. You need to compare these two. I hope you got it. Now the next question, question number 2. What will be the chargeable gain after rollover relief if AOM sells the second warehouse? Okay, now the second warehouse. So for this, the answer is 29. The second warehouse is the cost is 113 and selling price is 180. Okay, 113 and 180. Okay, ji. So 180 minus 113 will give you 67,000, right? Now again, same thing. Out of this 180, the new property is 168. So how much is the cash in hand? Cash in hand is equal to 12,000. Cash in hand is equal to 12,000. Cash in hand is equal to 12,000. Remember? So same thing. Now you will write as a balancing figure here, rollover relief. And here you will see, compare 67 and 12 now. Out of this 67 and 12, which one is lower? Which one is lower? The lower amount is 12. So 12,000 is immediately chargeable. Gain immediately chargeable. And what is the rollover relief amount? 55,000 is the rollover, the balancing number. This is always a balancing number, right? Okay. So your final answer is 12,000. They are asking the final chargeable gain. They are asking the final chargeable gain from you. Next thing, Leroy. On 2nd April 2023, now this is all about shares and securities. This is all about shares and securities. Okay. On 2nd April 2023, mark this date, Leroy sold 12,000 ordinary shares in Jerk Chip PLC for 83,400. Now, Leroy is a human being, individual. Whenever an individual sells the shares or gift the shares, for gain computation, we apply matching order rules. For gain computation, for individual, there are matching order rules. And matching order rule says same day purchase in order to match the cost. Number one is same day purchase. Number two, following 30 days and then shares from pool. Now open your eyes. This is your disposal date. You can check here. There is no same day purchase. There is no same day purchase and there is no following 30 days. There is no same day purchase at all. Check it out. And there is no following 30 days at all. So definitely this question is very simple. It's all about shares from pool. It's all about shares from pool. Okay. So now he had the following transactions of shares. First he bought these shares. then these shares, and then he gifted. See, this is a gift, means sold. Gift means sold. He sold these shares. He sold these shares. Okay. So this is a plus thing. This is added, but this will be subtracted from the pool. First two transactions are purchase, means addition in the pool, but the next transaction is basically subtraction from the pool. Okay. Now, but there is no same day purchase and no following 30 days. Strictly see the disposal date again. See the disposal date again. There is no same day purchase and there is no following 30 days. Okay, then the gift of 4,000 shares on 23rd October 2022 was to Leroy's daughter. On that date, the shares were quoted at the stock exchange. Yes, yes, yes. So these are the lowest and highest quoted price. So whenever we sell, whenever we gift quoted shares, instead of DP, we use the market value. And for quoted shares, market value or market price is the mid quoted price. It is the mid quoted price. So 7.28 and 8.2. What is the mid amount? Mid amount is £8. Mid amount is £8. Okay. This will going to be the market price for the calculation of gain for this gift. Okay. Mid. Gift holdover relief is not available in this. There is no gift relief available. Neither disposal of Jerk Chip PLC qualify for business asset disposal relief. There is no BADR. There is no BADR. Okay. Ignore all these relief. For the tax year 2022-23, right now we are in 22-23. Leroy is a higher rate taxpayer and will remain so for the tax year. That means this year Leroy is higher rate taxpayer, next year also higher rate taxpayer. So if you transfer this gain next year, still you will have to pay a higher rate. No advantage of transferring this gain to next year, because in both year you are higher rate taxpayer. First thing. Then Leroy regularly makes disposal of other investments, so no annual exemption available in either of the tax year. That means if you sell these shares now, no annual exemption available. Even if you sell it in the next fiscal year, again, no annual exemption is available. Okay, clearly it is written. And this is also connected to one MCQ. Now, what will be the chargeable gain? This we have done these two. Now, question number 3. Which of the following is correct in relation to Leroy gift of shares? First, they are asking about gift of shares. The consideration is 0. A capital loss will arise. No. Consideration, whenever you gift a shares, instead of DP, we use market value. So yes, there is a market value is there, so it's wrong. The cost of the shares should be established on a FIFO basis. No, the cost should be taken from the pool. Here in this case, the cost should be taken from the pool, right? Because there is no same day purchase, there is no following 30 days, then we have to take from pool as well. The cost of shares, again wrong. The share should be valued at market mid price. Yes, this is the answer. Mid quoted price. Mid quoted price, I have already told you, £8. Mid quoted price, which is £8. Mid quoted price, which is £8, right? So D is the obvious correct answer. All other options are incorrect, you can see. Next thing is, what is the chargeable gain arising from Leroy's sale of shares on 2nd April 2023? Okay, this is the final real requirement, which is time consuming. If you want to see, first we bought these shares, then this, and then we sold this. So we need to make a pool. Right? Because this is your disposal date, 20th April 2023 is the disposal date for these 12,000 shares. And whenever you sell shares and whenever you are going to calculate the gain or loss of shares, always apply. Always don't forget to apply matching order rules, and matching order rule says same day purchase. See, on 2nd April 2023 there is no purchases, so there is no same day purchase. Then you have the second step, following 30 days. There is no following 30 days, so definitely you have to make a pool. Definitely you need to make a pool. Definitely you need to make a pool. Okay, so let's make the pool. First two things are addition and then there is a deletion. Okay, let me also take the picture because I also need to move the screen. So the first event is 1st March. It's 20,000 shares. First we bought 20,000 shares for the cost is 19,800. Then next we bought July 18. How many shares? It's 8,000 shares for the cost of 27,800. So let's update it. First, it will be 28,000 shares and the cost will be, wait, the 19,800 plus this will be 47,600. Now, can anybody tell me? Hope you have taken the picture. Now the next event is gift of shares. Gift means delete. You have gave away the shares. So now, because of this gift, you need to how many shares you gifted? 4,000 shares you gifted. So you will delete 4,000 shares. And now how will you subtract take the cost? Listen, how are you going to take the cost of these 4,000 shares? Listen, 47,600 is the cost of 28,000 shares. In your existing pool, 47,600 is the cost of 28,000 shares. So how you gonna do it? Listen, 47,600 divided by 28,000 shares. So it will be the cost of one share. Multiply by how many shares you just removed from the pool? 4,000. Okay. So now your updated pool is 24,000 shares and 40,800. 40,800. Right? Now the next event, see, we have accounted for two purchases and one gift. Now the next event is the real disposal of 2nd April. April 23. Now we sold 12,000 shares. Now we sold 12,000. So definitely we need to remove 12,000 shares. Now tell me, right now in the pool, there are 24,000 shares. And what is the cost? 40,800. So 40,800 is the cost. 40,800 is the cost of 24,000 shares. And now we are selling 12,000 shares. So it's definitely half of it. It's definitely half of it, right? So this will be 2,400, right? The remaining balance in the pool is this. Now, my dear student, we have calculated, this is the number. See, we have calculated the cost of 12,000 shares. We have calculated the cost of 12,000 shares. Now let's finally calculate the gain. Here you go. DP of 12,000 shares is, I think, 84. Let me see the picture. It's, I think, 83,400. Yes. Okay. Now less cost. Cost is how much? 20,400. Finally, the gain is 63,000. Okay. Now, one thing I would like to highlight here. Normally, it's my practice in class. I normally follow this practice. Whenever I calculate gain of shares, I write all three steps. In order to match the cost, normally I write three steps. It's number one is same day purchase, number two following 30 days, and then shares from pool. This time I've directly written cost from pool. Okay, because there was no same day purchase, there was no following 30 days purchases. Okay, but I hope you can do it. It's not difficult. You have taken all the classes. Now the last question. The answer for this was, I think, 63, right? Yes, it was 63. Sorry. Okay. Now the last question is question number 5 is, why would it have been beneficial if Leroy had delayed the sale of the 12,000 shares in Jerk PLC until 6th April? 6th April 23 means my next fiscal year. 6th April 23 means 23-24 fiscal year. So first, let's read these lines. Let's read this paragraph. This person is higher rate taxpayer now as well as in the next period. So if you shift the gain to next period, there is no more tax rate saving. There is no more tax rate saving. See the screen. Second point. Leroy regularly makes disposal of other investments, so no annual exemption is available in 22-23 as well as in 23-24. So if you shift your gain from this fiscal year to next fiscal year, still no benefit of annual exemption. So these two benefits, don't think over it. Now listen. The delay would result in the chargeable gain being taxed at lower rate. No, because same tax rate for this year as well, because higher rate. This person is higher rate taxpayer in both periods. The annual exempt amount would reduce. No, there is no annual exemption. There is no annual exemption is available in the current year as well as in the next period. The tax liability would due later. Yes, 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 yes. Listen, if they sell it now, if they sell it now like 2nd April 23, so it will be considered as a gain of 22-23 fiscal year. It will be considered as a gain of 22-23 fiscal year. And hope you remember, listen to me. If there is a gain of 22-23 fiscal year, then the due date for this gain, the balancing payment is 31st January 24. 31st January 24. Hope you remember the date. But If we shift this gain in 23-24 fiscal year, if we shift this gain in the next fiscal year, that means this gain will be accounted for in the next fiscal year. And now for 23-24 fiscal year, the due date for the payment of CGT is 31st January 2025. Hope you remember the chapter of self-assessment which I taught you. Capital gain tax is always paid through balancing payment, like from in the 31st January following the end of the fiscal year, right? Okay. So the answer is C. Answer is C. Again, now see the D. Business asset disposal relief would no. There is no BADR available in this question. We have already read it. So answer is C. The cash flow benefit. It's a cash flow benefit. Your gain will be deferred. Your gain will be deferred. Now the next question. Sam, aged 76, has already been invested 4,000 pounds in cash individual savings account, cash ISA, during 22-23. Now, we all know individual saving account is exempt for income tax as well as capital gain tax. Okay. He now wants to invest in stock ISA, stock and shares ISA. Yes, there are two types of individual saving account. One is cash ISA, in which you get the fixed income return, and the second is stock or shares ISA. As he has heard that these are tax efficient now. On 20th December 2021, this question relates to major IHT, inheritance tax. Inheritance tax. Now use your brain. On 20th December 2021, he made a cash gift to his daughter. One person giving to another person. One person. This is Pat. This is Pat. Okay. He is now going to make a cash gift of 450,000 to a trust. Now this is CLT. This is CLT. This is CLT. Okay. Sam is planning to make a gift of 10,000 to his granddaughter on her wedding. You remember the marriage exemption topic? You remember the marriage exemption? And from grandparents, it's 2,500. First 2,500 is exempt. If grandparent is giving gift to grandson or granddaughter, then in the marriage, the marriage exemption is first 2,500 is exempt. Okay. The nil rate band for 21-22 is 325. And you should assume that this remains yes. Okay, so we all know nowadays the nil rate band is 325. Nowadays, the nil rate band is 325,000. Nowadays, the nil rate band is 325,000, right? Identify whether the statements are correct or incorrect. Listen, Sam's cash ISA is exempt from IHT, so will not part from. No, incorrect. Listen, individual saving account is exempt from income tax and CGT, not from IHT. For IHT, all assets are, even the exempt assets, those assets which are exempt for CGT, still they are full-time taxable for IHT. So this is incorrect. If Sam invests in stock and shares ISA, it will no, it will be exempt. No, again wrong. Incorrect. Individual savings account is exempt for income tax and CGT, but not for IHT. For IHT purpose, all these are full-time taxable. What will be the lifetime inheritance tax that will be payable in respect of Sam's gift of 450,000? Okay. Hope you remember if Sam pays, Sam is donor. Okay. Sam is donor. That means if donor pays, remember, whenever donor pays the lifetime IHT, the rate becomes 25%. And then we need to do grossing up as well. The rate becomes 25% and then we need to do grossing up as well. Okay. So let's see the dates. So it's 20th Feb 23 and the previous gift is 20th December 21. 20th December 21. Now, as the examiner has written the cash gift, that means it is the actual amount of gift. It is the actual amount of gift. Wait. So we need to deduct annual exemption. Okay. Now this 20th December 21 means 21-22 fiscal year. Okay. And there is no gift. This is 21-22. There is no gift in the previous fiscal year. So annual exemption will be 3 plus 3. Previous fiscal year 3,000 and this year 3,000. Here we'll deduct annual exemption of 6,000. So it will be okay. Now this 20th Feb 23 lies in 22-23 fiscal year. Hope now you can recognize the fiscal year. This is a very basic thing. 20th Feb 23 means 22-23 fiscal year. Now in the previous fiscal year we have already used the annual exemption. In the previous fiscal year we have already used the annual exemption. So now you will only get current year annual exemption. So this is 447,000. Okay. 447,000. Now listen, my dear students, we need lifetime IHT right now. Lifetime IHT means the person is alive. The person is alive. The person is not dead. The person is not dead. Lifetime IHT means the person is alive. So when the person is alive, so right now this PAT, see, when you are alive, there is no tax on PAT. When you are alive, there is no calculation of tax on PAT. Okay. So in past, you didn't calculate anything. So first time you are calculating here. So let me write the heading lifetime IHT on CLT with the date is the date is 447,000. The date is 447,000. Sorry, the amount is 447. Now the NRB we all know is 325. NRB is 2025, and listen my golden words. For NRB is given for last 7 years, last cumulative 7 years. So for NRB deduction, we always come and stand here. We always come and stand here on the date of gift, okay? And we check 7 years back. And we see whether there is any tax calculation, whether there is any tax computation in last 7 years. There is no tax computation because the person is alive. There is no tax calculation. Okay. So the NRB is free. Complete NRB is free. So your NRB will be used here. Now, what is the excess? Okay, this is the excess and the tax rate is now 25% because the donor is paying. It's going to be 30,500. This is your lifetime IHT. This is your lifetime IHT. And for your kind information, one extra step I'm telling you here. Here the donor is giving. Here the donor is giving IHT. So not only we'll use the 25% tax rate, but also we'll do grossing up. So 447 was the amount of gift plus this is gross chargeable CLT. Chargeable transfer. Okay. If you add 477,500. Okay. This is an extra thing which I have just told you. 477,500, but the answer for this MCQ is 30,500. Please check it. Okay, the answer is C. What amount of marriage exemption will be available against the wedding gift? Definitely, marriage exemption is 2,500. For grandparents, the marriage exemption is 2,500. Okay. For grandparents, the marriage exemption is 2,500, right? And definitely, now there is no, and listen, can you check the date? Can you check the date of this wedding gift? It's 15th March 23. See, it's 15th March 23. Listen. So 15th March 23 comes after, listen, 15th March 23, 15th March 23 comes after Feb 23. 15th March 23 comes after 15th Feb 20th Feb 23. So if you walk left to right, your annual exemption must always be consumed by the first gift. Your annual exemption must always be consumed by the first gift, which is 3,000, okay? Which is CLT. So no annual exemption is available for this wedding gift. Plus marriage exemption is only 2,500 because of grandparents. Next one is, if Sam were to die, if Sam were to die in the near future, how much nil rate band will be used by the gift to his daughter? Okay, very good, very good. Simple. Let us say they are saying if Sam were to die in the near future, we say it. Let us say he'll die in April 23, for example. If he dies in April 23, okay, just imagine. They have written the word near future. I am saying after a few months, okay, like April 23. So whenever a person dies, listen, whenever a person dies, we mark this dead date and we go 7 years back. We go 7 years back and then we walk left to right, left to right. We go 7 years back and then we walk left to right. And this, see, this gift, first, this gift is coming, this pat is coming, this pat is coming, and this pat is within 7 years of the date of death. Yes, this person died within 7 years of gifting, within 7 years of gifting. So yes, this pat is chargeable. So now we need to calculate this tax on this pat, and this, as this pat is 194, as this pat is 194, so it will consume your, NRB. It will consume your NRB. So first of all, this pat will consume 194,000 NRB, and when then you will go to the this second, then you walk, and then you come to CLT. Then you come to CLT. Now in this final CLT calculation, which is called additional IHT on CLT. Additional IHT on CLT. Now, if you look back 7 years, yes, PAT consumed. Yes, PAT has consumed. This PAT has consumed your nil rate band. So how much nil rate band is consumed by PAT? Exactly the amount of gift, which is 194. The amount of gift after annual exemption. So yes, we can openly say it that this, if he dies in the near future, if this person dies in the near future, so this PAT will consume 194,000 of your NRB. This PAT, this is easy thing, not difficult. This PAT will consume 194,000 of your NRB. So answer is this, 194. You can read the requirement again. You can read the requirement again. If Sam were to die on 30th June 2027, now which two of the following statements are correct? Very good. Wait. See, these are the dates. So can you see the date of gift? The date of gift for CLT. See, the PAT is not PAT. The amount of PAT is very small. The amount of PAT is 194. So 194 will be totally cancelled by NRB. See, your NRB is 325. Your NRB is always 325. So if you, for example, if you calculate a death tax on PAT, so complete PAT will be cancelled with NRB. So no more tax calculation and no more taper leaf calculation. Okay. But if this, sorry, if this person dies on 30th June, on 30th June 27, 30th June 27. So let us say this is the day if he died here. So how much is the gap? How much is the gap between CLT and the date of death? CLT, this CLT and the date of death. Let me count. This is Feb 23. From Feb 23 to Feb 24, 1 year. Feb 25, Feb 26, and Feb 27. But there is no Feb 28. So more than 5. This is the bracket. More than 4 and less than 5 years. If he dies on 30th June 27, that means from this CLT, he's dying after 4 years and less than, he's dying after 4 years, but before 5 years. Okay. So between 4 to 5. Do you know the taper leaf rate between 4 to 5? It's 40%. 40% will be the taper leaf rate. If a person dies after 4 but before 5 years of the date of gift, then the taper leaf available will be 40%. Okay, don't forget this. Now let's read this MCQ. Normally I say to my student, these theory MCQs are dodgy. These theoretical MCQs are dodgy. Be careful. If Sam were to die on 30th June 2027, which two of the following statements are correct? Number A, the rate of inheritance tax applied to lifetime gifts as a result. Yes, this is correct. For lifetime gift at the rate of that, or I should say a very, very super hit dialogue. At the date of death, whatever taxes we compute, there is a flat rate of 40%. You know, at the date of death, whatever inheritance tax is calculated, it's 40%. So this is correct. The rate of inheritance tax, no 20% rate now. The inheritance tax liability, no, there is no 20% taper relief. Yes. The inheritance tax liability can be reduced by 40%. Yes. See, the taper relief will be 40% because the gap is more than 4, less than 5. More than 4 and less than 5. And hope you remember my favorite dialogue, famous dialogue. For taper relief, listen to me. For taper relief, always calculate the gap between date of gift and date of death, date of gift and date of death, date of gift and date of death. The same thing I just did. Okay. So hope you understood the lecture. So please work hard. These are ending days, very important days for you. Thank you and take care. Bye bye.